57% of Americans say they feel behind on their retirement savings, and 48% of workers with a specific retirement goal don't think they're going to be able to meet it. That's according to a new Bankrate survey. Ramsey Solutions research also finding 37% of Americans say they owe more on credit cards than they have in retirement savings. This as Americans are struggling financially due to high inflation and high interest rates. Joining me now, Ramsey Solutions financial expert George Kamel. George, to tell us about, you talk about, and I know that Dave does as well, it's all about getting to retirement, but we've seen this huge shift in the last couple of years post-pandemic where Americans wanted experiences. They wanted to live. They wanted to, go on those trips they never went on to. But now is it to their detriment because they've been running up their credit cards?
Oh, absolutely, Cheryl. We become land of the free and home of the broke, and it's turning into a retirement crisis, and Gen X is the next up. And you saw those stats. Gen X is saying they're going to need a miracle to retire. They're saying they need $1.56 million to retire comfortably, and yet the median 401k balance is $56,000. So we've got to do something about this, and this might be you, it might be your parents, it might be the ones after you, but you've got to do something about it. And if you don't invest anything, you won't have any money later on. What
are the things about this younger generation, too, whether it's Gen Z or millennials? They don't seem to value home ownership. And that is a tectonic shift from what, say, my parents' generation or my grandparents' generation. It was all about the American dream, buying a home. And they're not interested in that. Can you explain what's going on with that generation?
Well, I think they're feeling hopeless. I mean, they're looking at the house prices, the home values, and they're going, well, that'll never be me. I guess I'll rent forever. So there's a level of cynicism, and there is some reality to that. It is harder for them to get in the housing market. But as far as investing goes, they actually want to know. They're looking to social media and TikTok and Instagram to figure out, how do I build wealth? And the problem is they're trying to do it fast. They want to get to where their parents were, but they want it to take 5 years instead of 25 or 30 years. They've got to go, what's going to happen 30 years from now if I don't invest? What's going to happen if I'm the hare instead of the tortoise? There's a lot of things you can do to invest and build wealth in a very risk-free way where you're not sort of just Hail Marying your retirement.
Well, that really concerns me about that generation. I want to bring in Jonathan Fahey. I mean, you're a parent, obviously. What is that? What are you seeing in the younger generation these days as far as their thoughts about money and how they invest?
Yeah, I mean, I think he's right with the younger generation. When you get this cynicism, which he was talking about, it is bad for the overall for the country and for the overall economy. But I do think people, when they see this out of reach, and you're right that this was always the American dream to own a home, and that's where a lot of people have been parking their savings for generations and generations. A lot of people, their biggest asset is generally their home, and that's the way they can retire from. So I do see that, the younger generation with the cynicism, with the hopelessness. It's not a good thing for the future to see if they are hopeless, they're not going to be as productive. They're not going to, everything is worse.
Yeah. Also, too, a lot of them when they're younger, and correct me if I'm wrong, George, but they don't think about doubling down on their 401k. I mean, some of us might have been told when we were young, max out your contribution to your 401k, and the younger workers don't think that way.
Well, they see retirement as this far-off thing that may never happen for them. And again, it's back to that cynicism. And the good news is there's so much you can do. They have time on their side. And we found that compound growth is the key. In our millionaire study, over 10,000 of them, 8 out of 10 said the 401k was the key vehicle to their success. But we want to make it more complicated and a little more exciting. But the truth is the 401k, mutual funds, IRAs, that is the path. And we have a free guide for everyone out there at RamseySolutions.com/guide to guide them through this investing process, help them understand. And I think financial literacy is a huge part of that.
Well, and there's a lack of financial literacy, and I agree with you. I've been saying that for years. Let's talk about now. Let's shift gears and talk about those that are near retirement right now. That generation that is so far behind. Are there any steps that they can take now? Whether it's savings. I mean, we're seeing interest rates now going down. That means that the savers are going to get edged out, and they had a nice run, if you will, for a couple of years. But that story is changing. What do you say to them?
Well, I'm taking calls on the Ramsey Show this week, and people are saying, hey, I want to pay off debt, but I'm also trying to invest at 3% to get the match. And I found when you do 7 things at once, you don't really accomplish anything. So if you've got consumer debt, you have to tackle that first because it's robbing your ability to invest for the future. Once you knock out that $1,000 in payments you're sending to lenders, you can then invest $1,000. Even if you start at 40 with $0, you can still retire a net worth millionaire if you just get out of that debt in a few years and get focused.
All right. Before you go, I do want to get your take on the election, and I'm glad to hear that you're taking in those calls and hearing from real people about what they really need and what they're worried about. So, how do you think the election could impact people's retirements and retirement savings? We have two candidates with two very different ideas about where the U.S. economy should go and how they want to change the U.S. economy or improve it.
Well, let me give your viewers some hope. Regardless of who's in office, here's what we've actually found. Here's what the data shows. The last 4 elections, the stock market was up every single time after the election, regardless of who was in office. So I have a lot of optimism in the American economy. I don't have a lot of faith in the government and the politicians, but I do know the stock market in the U.S. over the long haul is going to go up and to the right. So you want to be a part of that roller coaster and stay in the game.
Yeah, John Lonsky, you're on set with me. You're overall optimistic about the market, at least.
Yeah, long term. I would say for young people, go ahead and put the money in equities. Okay, I made the mistake when I was young. I put some money in bonds, and I lost the opportunity cost proved to be pretty large. And I would also, you know what else I would like to mention is home affordability. That is a big issue for first-time home buyers. If you have enough people that cannot afford to buy a home, that only tells me one thing: that home prices will eventually ease. They'll go lower, especially when these baby boomers finally decide to sell their homes in large numbers and downsize their dwelling. I think that's another possibility. And what you're talking about, this overhang of consumer debt, to get rid of it, as the other fellow mentioned, we have to somehow save more money. We have to cut back on spending. And all of this is pointing towards a slower rate of growth for consumer spending. It is inevitable if we're going to have a better financial balance for these younger households.
Yeah, and George, last word. He makes a great point that those that would like to buy a home, they can't afford it. And I think that's Gen Z, that is millennial generation as well.
Absolutely. And that's where the foundation of the Ramsey baby steps comes into play. When you get out of that debt aggressively, we're talking the extra jobs, cutting back on the lifestyle and the YOLO mentality. Well, in 2 years, you're debt free. Another 6 months, you have an emergency fund. Now we can save up for the down payment instead of getting into this house with no equity, with a mortgage that's way too big to handle. And that's what's causing part of this retirement crisis. People fell down that path. So we got to get really going and focused on our financial plans.
So George Kamel, thank you for being here. Appreciate it.